Hi traders, it's nice to be back with our new video analysis after a few weeks off. So in today's video we will take a look on the euro dollar, Aussie dollar, dollar yen, S&P and crude oil. So on the euro dollar, as you know, we are still looking lower, expect lower prices in wave C. And this could unfold later this year because this was a corrective rally from these lows here, which appears complete because this decline was impulsive. And here is our 5-wave decline that I just mentioned, and it seems that this rally from latest lows, actually from March lows, is corrective. Okay, simply this move cannot be counted impulsively, so I think it's corrective, which means that larger trend is down. In fact, even if you would mark end of some complex correction here, you would then still need an impulsive qualities from that low. Well, I can see some very slow price action here in these late stages, so actually this price action is not looking good for any bull market. Okay, so I think that we are in final stages of wave C of this complex corrective rally. Ideally we will see a reversal lower from around 61.8% retracement or from this swing high. Okay, I could also label this wave count as a WXY, but the fact is that sooner or later market should turn to the downside. Now on the euro dollar 4-hour chart, I'm tracking this ending diagonal placed in wave C. We have seen a sharp pullback to the downside last week, which made an overlap with this swing high. So I think that this is an ending diagonal in progress. Ending diagonals are reversal patterns, and usually when ending diagonal occurs you will typically see a divergence on the RSI. So you can see here that RSI is not confirming here the higher highs, which means that these bullish moves are not strong. The volume is very low, you can see very tight ranges here. So actually that's this is supportive for a coming turning point. Okay, however, ending diagonals are also 5-wave patterns. This is wave 1, wave 2, wave 3, wave 4, and it seems that we are now headed higher in wave 5. So we still need this one more high here before we may look for a turning point to the downside. Okay, now ending diagonal, actually each leg in ending diagonal is typically structured by 3 legs, or it has a shape of a corrective movement. Okay, very slow, very choppy moves. So don't be surprised if this 5th wave here will be structured only in 3 legs, and then you will see a 5-wave decline. Okay, because this would then be a very nice textbook example of a 5th wave. If we see a 3-wave move into a new high and then an impulsive reversal lower back towards this wave 4, well, then this will be a very strong indication that the market has turned bearish. So for now euro dollar is still in a bullish mode, but be careful here. Now I'm also still tracking this head and shoulders pattern. It's huge head and shoulders pattern. We are now testing the upper side of this parallel trend line, which is actually a trend line, parallel trend line to the neckline. Okay, now we are again at this zone where the market felt in mid-June. So I'm looking for something similar here again, and I expect a new sell-off, something similar like we have seen here. Okay, of course, invalidation levels for this euro dollar bearish view is here at yearly highs, and if these highs would be taken out, then of course we will have to turn bullish on the euro dollar, but still only temporary. In this case we would be looking for more complex wave B, but still would be tracking a triangle. So actually this would then be our wave count that we would be looking at. Okay, still a triangle in this wave B, and in such case we would be looking for higher levels in wave E, much more complex and longer wave E than on the first place. Okay, so now let's take a look also on the Aussie dollar. on Aussie dollar, firstly we will take a look on the weekly chart. It's interesting that Aussie dollar has been very weak over the past few weeks and months, while the other major currencies were holding quite well against the US dollar. Well, we can see here on the weekly chart that wave C is testing this important level around equality, okay, where wave A equals to wave C. So this is a very typical but still only a textbook level from where where market will form a turning point. Okay, but before for a turning point, before we may look for a turning point, we of course need a completed substructures on the lower time frames. Okay, so firstly let's take a look on the daily chart. Here I'm tracking a 5-wave decline. We were looking for this wave 4 pullback. This wave 4 was complex and pullback was not so deep, which is fine because wave 2 pullback was very deep. Okay, so when you will see a wave 2 pullback very deep, well, then you can expect maybe a little smaller pullback in wave 4 or vice versa. Okay, so it looks like that we are now trading lower impulsively here. Impulsive means that market is making a 5-wave movements on the lower time frame. So now we will check the 4-hour chart and we will see if this wave 5 is maybe already near completion here, or is maybe there room for lower levels. Well, on the 4-hour chart, from this wave 4 swing high, which was an expanded flat, I can see only 3 completed waves. Okay, but we know that wave 5 is motive wave, so we need 5 waves before we may look for any bottom on Aussie dollar. Well, this was wave 1, wave 2, nice extended wave 3. Notice that moves accelerated to the downside after a break through this lower trend line of this base channel. This is very important breakout that usually confirms the wave count of an impulsive price action. Okay, so this base channel you actually get so that you connect high of wave, actually start point of wave 1 and end point of wave 2. Okay, and then you put a parallel trend line at the end of this wave 1. Okay, and then if you will see move accelerating through this lower trend line, support line of this base channel, well, then this will be a very strong indication that market is that momentum is picking up, the bearish momentum in our case, that move will probably extend. Well, if the move is extended, this typically occurs in wave 3 in the middle of an impulsive price action, which means in the middle of a 5-wave movement. So if this is a wave 3, then we know that coming bounce, which I think is already unfolding, will be a corrective wave 4. We know also that when supports are taken out, like in our case here, you can see that these 2 supports were taken out. Well, then ideally this support will turn into a resistance after a pullback. So I'm looking for this wave for pullback back towards this nice resistance zone where we also have this base channel, and I think this would be a very nice textbook example for wave for pullback. So be aware of a new sell-off after a completed retracement. Okay, our invalidation level is here because we know that wave 4 must not step into the territory of wave 1 or wave 2, whatever. Okay, and now let's take a look also on dollar yen. On dollar yen, I have decided to rework some long-term wave count. Now we will take a look on this monthly chart. Actually, I think that we have a tradable low here in place, and that market is moving higher. Actually, dollar yen is also trading with the stock market. We are bullish on the US stock market. We have probably a few years for higher levels, so I'm looking higher on dollar yen as well. So I came out with this wave count, which shows the idea of a flat formation. Flat is a 3-3-5 pattern where you have 3 legs in wave A, then 3 wave move in wave B, which moves into a new extreme in our case here. But this move cannot be counted impulsively, so I think it's corrective. That's why I labeled it as a wave B and come out with this flat solution. And so I said the structure is 335, so this was a free wave movement in wave A, free wave movement in wave B, and now it seems that we are headed higher in impulsive wave C, which needs to be subdivided by 5 waves. Well, this recovery here could be a first part of this wave C. Now let's take a look on this daily chart. This was wave 1, wave 2, nice extended wave 3, and now we are trading sideways for some time now. So I'm considering a triangle consolidation here placed in wave 4. I have turned bullish on dollar yen, and the reason is very simple. Notice that this decline cannot be counted impulsively. Okay, this decline is very slow, it's choppy, it's only in 3 waves. It's actually a very tight range, while this move was very sharp and explosive. Okay, so this is typically impulsive move, while this is typically corrective move. So if this is corrective move and if this is impulsive move, well, then we know that this market is headed higher, that bias is up on dollar yen. So I'm tracking this for the wave triangle. Could see a spike to a new high here, maybe to 102 level, and then be aware of a reversal lower into wave C, D, and E. I'm also tracking another wave count for this dollar yen, but also a triangle. If this support will give way, let me check the 4-hour. Yes, that's the support at 97.50. If this support will give way, then maybe we are already in wave C here. Now let me check this alternate count for better understanding. You can see here that I labeled this wave A down, wave B, and now we could be moving deeper down into wave C. But in either case, I think that we have still few more days, if not weeks, to go sideways here before we will see break to the upside. But I'm bullish as long as the market is trading above 93.70. Okay, and now let's take a look also on the S&P. On the S&P 500 monthly chart, we are bullish here. This was an expanded flat because this wave B moved into a new extreme, and this wave C fall below wave A, and now market is reversing higher, is trading sharply and impulsively here. We can see that move are now already in an extension. So I think that we are in the middle of this huge red wave 3 that is part of this blue wave 5. So we are trading higher, and I'm looking for this red wave 3 region here around this 261.8% extension of this wave 2, or 161.8% extension of this red wave 1. Okay, but of course this move can go much higher, I mean this red wave 5, but as always we need to look for minimum expectations. So I'm looking for this region here. Now on the daily chart we will take a look on this substructure of a black wave 3. Here we have a black wave 3 in progress. We know that black wave 3 or third waves, extended third waves, must be subdivided by 5 legs. Well, here we have wave 1, wave 2, wave 3. We were looking for this wave 3 top here. We were also looking for a wave 4 pullback, if you recall, back to the previous territory of a wave 4, which reversed once again and sent this market into a new all-time highs. So it seems that we are now headed higher, moving higher in this wave 5 final leg of this black wave 3. So we could be already in final stages, but based on Fibonacci projections and Elliott wave guidelines, I'm looking higher here from current levels. You will typically see when wave 3 will be extended, like in our case here, you will typically see that wave 5 will be equal to wave 1. Well, in our case this means that we have still room for 1760 levels, okay? Or we also need to respect 261.8% extension of this wave 1. Okay, this is also typical Fibonacci zone where this 5 wave movement could finish. So I'm looking higher here. Also on the intraday charts, I cannot count a completed 5 wave rally, so I will be looking higher on S&P 500. Okay, and here we have this 4-hour chart. I'm looking higher within this wave 5 here. And now let's take a look on crude oil. Here we have crude oil, that's our alternate count, we will discuss about this later. Crude oil, let me show you this weekly chart. If you recall, we are tracking this triangle now for a while now, and are looking for a corrective move up here in wave D. Well, this wave D is very close to our invalidation levels, because we know if that's a triangle, then this wave D must not move above this wave B. Well, we are still below these levels, but very close, so it will be interesting to see how the market will respond around this 110 level. If we are correct, of course, then market will reverse impulsively lower in first leg of free wave decline in wave E. Okay, so on a daily chart, if we are correct, then we should see maybe a spike to a new high here, but not through 110.50 level, because that's our invalidation level. So maybe we'll see a spike to a new high and then a reversal lower, but keep a very close eye on this critical level. Of course, if we'll see spike through this critical level, that doesn't mean that our wave count has been invalidated. Okay, I will usually change my wave counts, and we'll keep a very close eye to invalidation levels if the market will move through this level decisively. Okay, what this means, if market will move, will make very strong impulsive rally and close maybe on a weekly basis around $115 per barrel, only then I will of course change the outlook. But for now, of course, we need to respect the price action, we need to look higher and go higher with the market. And on the intraday charts, I'm looking higher simply because recent decline has been corrective and this move is looking impulsive. Okay, so I reworked the latest wave count. I labeled here end of a wave 2, an extended wave 3, deep wave 4 pullback, and now this is, it seems it's part of a larger black wave 5. So from a minimum perspective, I'm looking higher here, and I expect test of these highs, actually a spike into a new high. Okay, because when correction is finished, then you would expect that this correction will be fully retraced. Okay, so I'm looking higher here. Actually, we have a very nice pattern here, impulsive rally and a free wave retracement, which suggests higher levels. But as I said, 110.50 or 40 level around there is very important on the larger time frame charts. So if this level will be taken out decisively, then okay, that's fine. We will just switch the larger weekly picture, and we will start tracking this, not this one, but just a second, we will start tracking this wave count. Okay, which suggests that this triangle has already finished last year in October here, and that we are now moving higher in impulsive fashion. Okay, that we are now in wave 3. So if we'll see a decisive break through this swing high and test maybe these highs, then I think I will be start tracking this wave count. Okay, okay traders, that's it for now, and I will catch you with the further updates on our intraday page. Have a good day.